Welcome back, my friends. The news today is that shares in Meta plunged 16% on weak revenue guidance, even as first quarter results top estimates. Meta issued better than expected results for the first quarter, but the stock sank on a light revenue forecast. The company has lifted investor expectations after the stock tripled last year and jumped another 40% so far in 2024. Headcount declined by 10% from a year earlier to 69 to 329. Meta's Reality Labs posts $385 billion loss in first quarter. Mark Zuckerberg's bet on the metaverse continues to be a money-bleeding endeavor, with the unit reporting billions of dollars in losses every quarter. In 2021, Zuckerberg changed the name of his company from Facebook to Meta to reflect his vision for the future of computing. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Meta shares plunged 16% in extended trading on Wednesday after the company issued a light forecast, which overshadowed better than expected first quarter results. Here are the key numbers. Earnings per share, 4.71 per share, versus 4.32 per share expected by LSEG. Revenue, $36.46 billion versus $36.16 billion expected by LSEG. Revenue increased 27% from $28.65 billion in the same period a year earlier, the fastest rate of expansion for any quarter since 2021. Net income more than doubled to $12.37 billion, or $4.71 per share, from $5.71 billion or $2.20 per share a year ago. One reason for the pop in net income is that, while revenue growth accelerated, sales and marketing costs dropped 16% from the year earlier period. Meta said it expects sales in the second quarter of $36.5 billion to $39 billion. The midpoint of the range, $37.75 billion, would represent 18% year-over-year growth and is below analysts' average estimate of $38.3 billion. The stock sell-off accelerated early in the earnings call after CEO Mark Zuckerberg jumped into his discussion about investments, namely in areas like glasses and mixed reality, where the company doesn't currently make money, and he said investments in artificial intelligence are increasing. On the upside, once our new AI services reach scale, we have a strong track record of monetizing them effectively, Zuckerberg said. The Facebook parent no longer reports daily active users and monthly active users. It now gives a figure for what it calls family daily active people. That number was 3.24 billion for March the 24, a 7% increase from a year earlier. Meta has raised investor expectations due to its improved financial performance in recent quarters, leaving little room for error. The stock is up about 40% this year, as of Wednesday's close, after almost tripling last year. In February 2023, Zuckerberg told investors it would be the year of efficiency, which initiated the rally. At the time, Zuckerberg said the company would be better at eliminating unnecessary projects and cracking down on bloat, which would help Meta become a stronger and more nimble organization. The company cut about 21,000 jobs in the first half of 2023, and Zuckerberg said in February of this year that hiring will be relatively minimal compared to what we would have done historically. Headcount declined by 10% in the first quarter from a year earlier to 69,329. Capital expenditures for 2024 are anticipated to be in the $35 billion to $40 billion range, an increase from a prior forecast of $30 billion to $37 billion, as we continue to accelerate our infrastructure investments to support our artificial intelligence (AI) roadmap, Meta said. Average revenue per user in the quarter was $11.20, the company said. Meta has been clawing back digital ad market share after a dismal 2022. At that time, it was reeling from Apple's iOS privacy update and macroeconomic concerns that led many brands to rein in spending. Zuckerberg spearheaded an initiative to rebuild the ad business with a focus on AI. On the company's last earnings call in February, Finance Chief Susan Li said, Meta has been investing in AI models that can accurately predict relevant ads for users, as well as tools that automate the ads creation process. Advertising revenue, which accounts for the vast majority of Meta's business, jumped 27% in the first quarter to $35.64 billion. Meta is benefiting from a stabilizing economy and surge in spending from Chinese discount retailers like Temu and Shein, which have been pumping money into Facebook and Instagram in an effort to reach a wider swath of users. Some analysts have warned that slower spending from China-based advertisers could be a source of concern in the first quarter, and as the year progresses. Li said on Wednesday's earnings call, that the company isn't quantifying the contribution from China in the quarter, but she said advertising revenue in the Asia-Pacific region increased 41% from a year earlier, making it the fastest-growing region, and was boosted by online commerce and gaming. The company's Reality Labs unit, which houses its hardware and software for development of the nascent metaverse, continues to bleed cash. Reality Labs reported sales of $440 million for the quarter and $3.85 billion in losses, bringing total losses since the end of 2020 to over $45 billion. Analysts expected the division to show an operating loss of $431 billion for the quarter. Meta shows no signs of substantially trimming its losses from investing in the metaverse, as competition heightens between the Facebook parent and Apple in the virtual reality market. In its first quarter earnings report Wednesday, Meta disclosed that its Reality Labs unit recorded a $3.85 billion operating loss. Revenue in the Metaverse division was $440 million, up about 30% from $339 million a year ago, and representing only around 1% of Meta's total sales for the quarter. Analysts were expecting a $431 billion operating loss and sales of $512.5 million for the quarter, according to StreetAccount. Reality Labs has now lost more than $45 billion since the end of 2020, when Meta first began reporting the business segment separately. Meta CEO Mark Zuckerberg has called the metaverse the next frontier, imagining a digital world that facilitates both productivity and recreation. He changed the name of his company from Facebook to Meta in 2021 to reflect his vision for the future of computing. For now, developing metaverse technology remains a fledgling and costly effort. The company unveiled in September the Quest 3 VR headset, the latest version of its mixed reality hardware with a starting price of $499. Apple started selling its $349 Vision Pro in February, touting a so-called spatial computing experience. Meta announced Monday that it will partner with third-party hardware companies to create new VR headsets using the same Meta Horizon operating system that powers its Quest headsets. Zuckerberg said that while Apple basically won out in the phone market with its closed ecosystem, Meta's move aims to ensure the open model defines the next generation of computing. The metaverse, once hailed as a revolutionary concept, has encountered several challenges and setbacks. Let's delve into some of the reasons why it's facing difficulties. One of the biggest challenges is the lack of interoperability and uniformity between various metaverse platforms. Unlike the internet, which relies on the unified HTML protocol, the metaverse lacks a similar unifying framework. Users should be able to seamlessly move between different metaverse environments and devices, but achieving this remains a hurdle. The metaverse's success hinges on its usefulness and ease of use for consumers. Usability primarily comes from simplicity, while usefulness depends on the variety of content and applications available. Consumers need compelling experiences across multiple metaverse platforms to drive adoption. The metaverse promises immersive experiences through virtual reality, VR, augmented reality, AR, and haptic gear. However, the current state of technology often falls short of the lavish VR experiences envisioned by pioneers like Mark Zuckerberg. Graphics and overall quality need significant improvement to match expectations. As the metaverse evolves, digital safety risks become more prevalent. Vulnerable groups are particularly at risk, and unwanted contact could become intrusive. The rise of virtual currencies within the metaverse also presents challenges. Meta, formerly Facebook, has invested heavily in the metaverse, but its virtual and augmented reality branch, Reality Labs, has incurred massive losses. Horizon Worlds, Meta's attempt at creating a metaverse experience, has struggled with low user engagement and lackluster graphics. The company faces the challenge of turning long-term investments into profitable returns. In summary, while the metaverse holds immense potential, it currently grapples with technical limitations, usability issues, privacy concerns, and financial hurdles. Addressing these challenges will determine whether it becomes a mainstream platform or remains a niche technology. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors including any type of specialty, nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you're looking for a job or an employee. Thank you for watching.